I'm delighted to have such a great turnout for our talk on ESG investing across asset classes. I'm Tensie Whelan. I run the Center for Sustainable Business here at Stern. I'm a professor and teach sustainability for competitive advantage. And we're going to hear from some of our speakers how, indeed, sustainability can be a competitive advantage in the field of investing and elsewhere. We also are always looking for Stern alums to engage and work with. So if any of you fit that category and are not already involved with us, please let us know. And always delighted to have such a great turnout from students who are doing terrific work here at Stern. So I'd like to ask Kyung-Ah Park, who is Managing Director and Head of Environmental Markets at Goldman Sachs, to kick us off with a few thoughts, a few reflections before I lead the panel in a discussion. After the discussion, we will then open it up to questions for the group. Kyung-Ah is, I've known her for many years. She's, does a terrific job in her role at Goldman Sachs. But her most important position is a member of one of my advisors. And she actually came up with the idea for this event and helped with organizing and recruiting it and putting it together. So Kyung-Ah, thank you so much. And please come up and love to hear your thoughts. Yeah. I'll get out of your way.
Well, thank you, Tons, and apologies that I ran a little bit late, so held up the start of this. Let me add my welcome to you all, and we have a terrific group of panelists who's going to really share the in-depth insight on this topic. So I just want to spend a few minutes just giving you some very high-level observations to frame the discussion so that you have the backdrop for the conversation. And let me begin by saying that ESG has become very much mainstream. Based on the latest statistics that many of you, I'm sure, have seen, is now a $31 trillion asset under management, about a third of the professionally managed assets, and continues to grow double-digit year on year. And it's gone from, at times in the very early phases of this, as what could have been viewed as concessionary investing, to very much about fundamentals. So really leveraging material ESG as a way to identify risk, or identify optimal risk return, and look at big levers that could actually influence long-term financial performance. Second is there's also great investor engagement around ESG, as well as in some cases activism. And a couple of years ago, for those of you who actually follow this trend, I'm sure you saw that there was a sea change in terms of the majority of shareholders actually voting in favor of climate change disclosure, as an example. And the third is, with this mainstreaming, there's a range of strategies that have developed, and I'm sure our panelists will talk much about this. Everything from not only negative screening, but also really looking at more kind of private impact investment strategies that capture alpha, as well as capturing environmental and social impact as well, and across private, public, real asset infrastructure, all the way through, in some cases, again, hedge fund strategies too. The fourth point that I'll make is that with all of this is a growing importance of ESG data, and in particular quantitative data, and looking at some of the trends around that. And so I'm sure our panelists will talk more about that as well. And there's also greater momentum for reporting and transparency with this. Some of it's also mandated by policy, as well as some of the stock exchanges, but also very much voluntary standards that are getting developed, whether it's SASB, I'm sure many of you are familiar with that, the Sustainable Accounting Standards Board, and the TCFD, the Task Force on Climate-Related Financial Disclosure. And then more broadly, when you kind of think about the macro trends, not only is this an investment trend, but it's also very much companies integrating ESG and sustainability. And I kind of think about my own journey at Goldman Sachs, where in some ways 1.0 was about risk and operational efficiency, but 2.0 is very much about growth, innovation, and really how do we better serve our clients by integrating ESG as a core competence and strategic lever. And we do that across asset management division. Lee's going to talk more about that. We do it across clean energy financing and investing, where we have a $150 billion target. We also do innovative green social sustainability bonds. And then, we are increasing capital to underserved communities, as well as to things like women-led businesses and investment managers. And these are all initiatives embedded, again, within the core of our business as a better way to serve our clients. And we're certainly not unique in this journey. And coming back to Tensie, it's incredibly exciting to see the impact that NYU Stern Center for Sustainable Business is having in terms of partnering with companies like us, but also really underscoring the case for the business around sustainability, and then really helping bring up the next generation of leaders. It's been a privilege to partner with you. And with that, let us welcome the panelists.
So we have 3 panelists here with us, as you can see. First to my left is Jessica, I'm going to butcher this. Zarzycki, there we go. CFA, Senior Director, Co-Portfolio Manager, and Global Sovereigns and Emerging Markets Fixed Income Research Analyst for Nuveen. Wow.
Yes.
That all fits on one card?
2 cards.
2 cards. And then we have Ailene Holderness, who is a Vice President at Pegasus. Thank you, that was nice and short. And then we have Lee, can you help me with Gao, who is a co-portfolio manager, Imprint Emerging Markets Equity Fund at Goldman Sachs. So really terrific to have you 3 here. Thank you so much. I wonder if we could just start off with an overall question to help the group understand what you're doing and how you're doing it. So can you tell us how you approach ESG investing at your company? What ESG factors and impact are you looking for? And why has your company made a decision to focus on this? And is it something that's sort of, a piece of what it's doing, of the company's doing, or is it really becoming embedded in the company? So love to hear your thoughts on that. And just to throw one more thing in, what kind of challenges are you having with moving this forward in your company? So
I can kick it off. So at the firm-wide level at Nuveen, or TIA, which is Nuveen under Nuveen Asset Management, it is embedded in the firm. It has been a long-standing history with our firm since the 70s. If you go back through a historical standpoint, and when we first started doing proxy votes and looking at South Africa apartheid, this has really been a part of our firm's culture for quite some time. But we've really ramped up this part of the firm and the firm's engagement with ESG investing over the last 20 years. I think equities went first for our company back in the 90s, and then fixed income came a bit later, but we've been investing on the fixed income side since early 2000s. From a firm-wide level, I guess maybe from a fixed income level, just quickly, how we look at ESG and the factors there. ESG for us is incorporated across all of the fixed income issuers that we look at. So it is part of the fundamental analysis that we do from the fixed income investment side. We really believe that ESG helps to reduce the risk and will add alpha over a period of time. We also look at engagement with issuers in talking about some of the more broader trends in ESG, and talking about what the company is doing in terms of corporate governance, corporate sustainability metrics, CO2 reductions, depending on the industry, and then impact investing. And impact investing on our side, on the fixed income side, is really looking at the green bonds, the sustainability bonds, and the social bonds, and making sure that when we're investing in these types of bonds, that it is clear and measurable. It has a direct impact. The use of proceeds has a direct impact, and that we are getting annual reporting on these metrics on a yearly basis. And that is so important to what I actually do at Nuveen on the responsible investing fixed income, which are dedicated funds for responsible investing that focuses on the best in class in ESG as well as the impact.
Could you give us an example of one of those funds, just to bring it home for people?
On the funds, or
yeah.
So I'm co-PM on the Green Bond Fund, which is dedicated towards renewable energy and climate change, as well as natural resources.
and what kinds of investments are you making there?
Sure. So it's actually across all different asset classes. So you can look at sovereign issuers. I was actually meeting with an issuer today from Latin America who's hopefully coming to the markets with a green bond. So we were engaging directly with them on what that potentially would be in the use of proceeds for the green bond. So corporations, we see it for anywhere from investment grade corporations to high yield and emerging market corporations to your ABS deals, which is your electric vehicle backed deals, to CMBS, lead building type structures. So it allows us to have diversification and provide that alpha.
Great, thank you. Thank you, Ailene.
Okay, so maybe I'll start with some context on Pegasus. We're a private equity investor. We're a thematic approach invest in sustainability and wellness in the middle market. So we're doing both growth and buyout investments, call it between 50 and 100 million of equity into private companies. So our approach to ESG is very much similar to how Kyung-Ah described it. It's a framework that we identify risks and opportunities in, no different than other, we think about commodity risk or we think about customer concentration. We overlay an ESG framework in evaluating companies and also identifying ways to grow those companies. We are historically a generalist investor, so ESG has really become more pronounced over time. We're investing out of our fifth fund right now, which is 100% focused in these sectors. And we've, over time, formalized our approach of how we evaluate and measure ESG across our portfolio. So we release an annual ESG and sustainability report where we go company by company. We've deployed $1.4 billion into these sectors, so measuring the progress that's made over time, and some of this is retroactive as these have become more codified in the industry broadly. But we've gone back and measured our returns in these sectors over other investments in the portfolio, and these sectors have done very well for us. So I guess why we continue to deploy resources into these sectors is because we're a firm believer that it generates alpha. And I think you can think about this a couple of ways, but the clearest way is to just look at aggregate returns, which we have done. And I think the way it fits, I guess the second part of the question is how it fits within our overall investment process. And it's quite integrated. I'm an investment professional at the firm, so my background is much more traditional private equity investing. I came to this space 2 years ago. I think the realization for me was much of the type of work I was doing in due diligence and sourcing was not so different than having a sustainability hat added to that. It's similar work and vetting of companies. It just adds, I would say, an additional layer that is probably more rigorous than your typical business diligence. And that needs to be said because it adds more time to the investment professional folks. You need to dedicate and devote resources towards having a really comprehensive ESG program. So I think where we differ from maybe a traditional PE investor in these sectors is we do spend time, I think, across investment professionals and more operations folks at making sure folks really understand what ESG means and what that framework looks like for, you look at sectors where ESG may not be as top of mind. Like health and wellness is a sector we look at deeply, natural and organic foods, while, that fits in many sustainability buckets for firms. I think we take a bit more of a rigorous approach of understanding, what's the core product here? Is ESG a tailwind in this sector? Is it core to the philosophy of the founders? And then I think the S and the G come often how the company operates and treats its employees and thinks about growth. So I'll pause.
Great. Could you just give us an example of one or two companies that are in that fifth fund, so to bring it alive for people?
Yeah. We're investors in a medical nutrition company that is basically focused on the microbiome. Why does it fit in this bucket? So I guess it fits in our healthcare and wellness theme generally. So the core product is an animal byproduct. It's colostrum, which comes from cows, or the type of colostrum we're taking is from cows. And so when we looked at this investment, just to bring it home about the more rigorous vetting, that's our core ingredient in this therapeutic. It's an anti-diarrheal product, very sexy. But we get the yes. But we're sourcing from farmers, and this. So understanding, is this truly a byproduct? Can we make a market that this would be? We've deployed 100 million in this company. Is there the supply chain to support this product? Was a huge question. Can we do so ethically? Can we manufacture it in a way that is both scalable, profitable for this product? If we went through all the stages of this is not a medical device, but it has to be approved, given that it's being ingested by people. So many different financial parameters were measured against doing this ethically and correctly. That's one example.
Great, thank you so much. Lee.
I would echo the thoughts of everyone else on ESG integration and how important it is. I know that, as Kyung-Ah mentioned, for Goldman Sachs, it's a very high priority for the firm. And within consumer and investment management, it's a major focus area, and one where today we manage about $20 billion of ESG and impact-related assets, an area that's growing very quickly as well. Within investment management, which is where I sit, our goal is eventually to integrate ESG into each and every one of our strategies. I've been at Goldman Sachs for about a week, so feel free to ask me all about every detail. But the reason I'm here is because Goldman Sachs Asset Management does see this as a priority and actually acquired the fund that I help run, which is an emerging markets equity fund that deeply integrates sustainability into our analysis. And investing in emerging markets is actually a very interesting thing to do when you're very focused on sustainability. On one hand, you are channeling capital to the parts of the world that arguably need it the most, and where markets are the most inefficient, and where, in a lot of cases, business practices are more divergent than in a lot of other parts of the world. On the other hand, because of those inefficiencies, it's often a bit more labor-intensive and a bit more difficult to do the analysis that you would need to do as a sustainability integrated or sustainability-aware investor. That's, I think, where our value proposition really comes in the most, and it's why we're so excited to be doing what we are doing. It's something that really has a lot of meaning to us, and the folks at Goldman Sachs Asset Management, I think, see that the same way. So how we look at sustainability is very similar to what my co-panelists have mentioned as well. To borrow an analogy from, I think, Al Gore, it's kind of looking at a light spectrum. There's visible light, and there's a part of the spectrum that's not as visible to the naked eye. But that part can be just as important or more important than the part that you can see. And as fundamental long-term investors, that's what we focus on as well. So we focus on not just the numbers that companies report, not just the quarterlies, not just the annual reports, but also things that might not be as obvious to the naked eye. And those include, for example, your greenhouse gas emissions, the trajectory of those emissions, your labor practices, your relationships with not only your employees, but also labor unions and your customers, and different stakeholders in society who might, I guess in a business sense, create risks over the long term that might be overlooked by some other investors. But in the short term, it's the right thing to do. And these are very core to our investment approach and to the way that we look at companies to invest in our universe. And our work doesn't stop at deciding what to invest in. It extends well beyond that, in the sense that we engage very actively with companies that we invest in and that we look at. And especially in emerging markets, that in itself creates a lot of value for all stakeholders because by making companies aware of sustainability issues, by speaking to them not only in the language of sustainability, but in the language of, in a lot of their local markets, their language, and in terms that are easy for business leaders to understand, we're able to actually make a lot of headway by making companies more aware that certain business practices lead to better returns over the long run and more outperformance for themselves as well. And certain business practices might not be in line with global best practices in certain ways. So it's a very holistic approach that we would use in our investment process, and it's one that we really think adds a lot of value to all stakeholders in society. At the end of the day, we really want to create a difference in the world. And to us, that's really channeling capital to the parts of society and the people and the companies who need it the most. And the other day, a friend of mine actually asked me, what do you do? And does it have meaning to you? It does in that sense, and in the sense that when you are able to make a difference by what you invest in, where you invest, and how you engage with companies down the road, it really is a very, very compelling value addition.
Could you give us an example of a type of risk that you identified pretty consistently that you see in emerging economies or emerging markets, and where you then decided not to invest, or you had a very direct engagement strategy about it? And similarly, maybe one example where you've seen pretty consistently that there's great opportunity on the positive side of a particular issue in emerging markets that you're focused on.
Yeah, certainly. This might not come as a big surprise to many of you, but corporate governance in general is an area of a lot of focus for investors in emerging markets, and for good reason, because governance standards do tend to have a bit more dispersion in those markets than other parts of the world, although it's true pretty much everywhere that you have to look at it quite a bit. In some markets, I would say a couple markets in Asia that I shouldn't name, there are different treatments of minority investors and different regulations around treatment of minority investors that often businesses with different ownership structures can use to increase their control at the expense of other public equity investors. And those are cases where we would be a bit more vigilant and a bit more eager to engage with management to understand the reasons behind those structures and what we can do to make sure that the interests of all investors are fairly represented across the board. And there was one particular case, an insurance company in Korea, where we did actually engage with a company that was in the process of acquiring them, or acquiring a partial stake in the company, to make sure that the remaining minority shareholders would be fairly represented, even after the transaction. And we were actually able to make quite a bit of headway in persuading them that treating minority shareholders fairly was the right thing to do, and that was actually reflected in the valuation of the company after the fact, which was a good outcome.
Right.
Some factors that are a little bit more difficult to engage on directly, or to expect, in other terms, a lot of change directly, are companies that have a history of business practices that are not only are not fair to minority shareholders, but are a bit more controversial, whether it's labor practices with their employees or with labor unions, or different business practices in terms of product design. I remember dealing with a company in China that makes computer games. And a lot of ESG or sustainability integrated investors look a lot at gaming in the sense of gambling as an area to avoid. But in a lot of cases, that's actually, a lot of aspects are shared with computer gaming, which are often very addictive as well. And if you look at markets like Korea and China, where these are very popular forms of entertainment across all ages, you do have to look at a lot of aspects of that business model in terms of companies that might monetize those a bit too aggressively. And don't have proper controls for children in particular in terms of game time or screen time. So if a company is not willing to engage on those issues that we see as longer-term risks, then we would typically choose not to invest in those. And in some cases, we would follow up with the regulators to make sure that there's a fair outcome for all stakeholders.
Great. Thank you. For everybody standing, there are seats up here, seats here, so feel free to come forward and have a seat. We can move these here. Yeah. If you want to stand, you're allowed to stand. That's fine. Just wanted to give you the opportunity. Great. Good. So none of you answered my challenges question, but I'm going to save that. I'm going to come back to it and just ask you that by itself, all right?
Too many challenges.
Too many challenges. But I think it's important to hear because I think that's often where we learn from that. But before, we'll save that for the last question. So Jessica, going back to you, can you walk us through, let's say, not all of us understand fixed income or how ESG relates to that, or what specifically you might do with ESG and fixed income, and what kind of a difference that might make in terms of outcomes for a fixed income instrument. Maybe you could walk us through that with some concrete examples.
Sure. So on the fixed income side, we really view fixed income or ESG investing with fixed income as being complementary to the fundamental bottom-up analysis that we do. And so what we've done as a firm in conjunction with our responsible investing team is really gone sector by sector and looked at what is important to each industry, what is really going to drive that industry and potential from an ESG standpoint. So if you're looking at energy industries, obviously you're looking at CO2 emissions or something in that form. If you're looking at like a Pepsi or Coke, what are they doing in terms of transitioning to a healthier diet, and how is that transition coming? How are they doing in terms of that transition? For example, I think Pepsi has agreed to moving to 50% of like health and well-being type products over the coming years. Where are they in terms of that? How much capital can they put towards that? How much free cash flow do they have to move into this? Are they going to acquire new companies? Does that mean that they're going to take on more debt? What does that mean from a fundamental perspective? So this is some of how we incorporate ESG into our fundamental analysis. And then we're always looking at, from the investment side, does the investment make sense from a relative value perspective? Right? We're not going to invest in something even though we think the company's going in the right direction if we don't think the underlying relative value is there. We're going to wait till the bonds get cheaper and then we'll buy it then. But we do think over the longer term that ESG helps to add value to a portfolio, but it also significantly helps to mitigate that risk. I mean, the worst thing for a fixed income investor is for a company to default and you go from 100 to 0. I mean, that's a big impact on your portfolio. So you really want to mitigate those types of risk.
Thank you. Ailene, how do you include sustainability and wellness when evaluating opportunities for growth and also evaluating risks in your portfolio companies? And can you give us an example walking from valuation to exit?
Sure.
In terms of how you've done that.
I think without being overly generalistic, we tend to look at growth opportunities first. How ESG can be a growth driver in companies, given that have a flight for quality in private deals right now. It's no surprise that the best companies are being chased by multiple capital providers, and I guess getting to why does a capital provider fit a certain company as an investor? So generally, we're looking at companies I guess, within sustainability and wellness, where we think there's a competitive advantage, no different than a traditional private equity firm. We're saying, well, we think you have a certain edge in this sector, whether that be green building, nutrition, various sectors. So the risk side of things, I think, happens more in due diligence. So up front, I think, I guess just to take a step back, given lofty valuations across the street right now, I think finding a niche as an investor is, something everyone is trying to do. So the approach we've taken is, we're pretty niche focused in 2 sectors. Within sustainability and wellness, we focus on 6 sectors, which you can imagine what they are. Energy efficiency, lighting, water, waste, and then on the health and wellness side, well-being, natural foods, stuff like that. And so within those, I think there's, I'd say, more ESG-focused companies that where we think the management team or the underlying product or service has more to do with either being more socially conscious, driving to a more green environment, more focused on emissions, or that's kind of a differentiator for the company. So we try to identify these companies early on, because I think if we can take hold of that, provide capital to fuel that message, we think that's a competitive moat. It can be, especially if that management team is aware of that edge. And think of a company like Rothy's, which is a sustainable shoe company that uses recycled plastic to make women's footwear. It's been around for 3 years, too early for us to invest in, but it's something I track because there's been tons of attention to kind of the crazy amount of waste in the apparel industry, and how are we finding innovations within these industries and funneling that growth. It's tough because a lot of people have, it's apparel is a sector where a lot of people are watching and waiting for disruption. And so that's probably a company that VC will ultimately fund for a while before different pockets of private capital come to play. It's just one example of, we're chasing growth within these sectors and really looking at trends at a macro level before we do our, I've spoken to kind of the nitty-gritty of due diligence within ESG.
And I think that's a really important point, that as investors, looking at those sectors that are being disrupted, and apparel is one, right? The automotive sector is another, in terms of thinking about what are the sustainability issues, the risks and opportunities. If that sector is being disrupted, there's an opportunity there to then find the sustainability leaders, right? And also the technologies and products and services that are being developed to help those sustainability leaders break through. So we're doing a lot of work around apparel and looking at all the while, like do you know there are dresses made out of milk? Just as an example. Right, so there's just all kinds of interesting things going on out there. It's so fascinating to look at from an investment perspective. So on the emerging market side, you talked a bit about the G, about governance issues. But one of the challenges I know in emerging markets is it can be more challenging to get information, right? And so from the environmental and social side, how do you go about determining performance around those companies that you're looking to invest in? And maybe if you could, again, walk us through some examples along those lines to help people learn about how, if they're focused on the emerging markets, what do they look for? How do they go about it?
Mm-hmm. That's actually one of the most exciting parts about our job, because not every company, actually very few companies in emerging markets have 200-page sustainability reports. And the ones that do, you should probably be a bit skeptical about, because those are typically the ones that most need to greenwash themselves. So the good thing is that we can actually start from a relatively blank slate. And after getting to know the companies, after a decade each, for myself and my manager, and for a lot of our colleagues, we're actually able to get to know the company's management teams, to get to know their suppliers, their customers, their employees, and their regulators in the markets that they operate. And I'd say that speaking with different parties along the value chain, especially suppliers and customers are actually extremely useful and extremely important in getting more information about a company's business practices, including environmental and socially related practices. Where we can, we try to understand as much about a company's culture as we can, and it's a very underrated part of what we think a good investment analysis process should contain. Because a lot of what a company does really stems from the tone that management sets and the tone that its employees tend to carry with them. We're trying to work on a better way to systematize our analysis of culture, but it's by nature a very qualitative factor that you have to keep following over time, including as management teams change. We look at all kinds of different sources, online and offline, but especially online, including Glassdoor and employee feedback. There are equivalents in China and other non-English speaking places as well. And those can be, they're not always what we would rely on 100%, especially if you have employees depart recently who might not love the company as much. But those in itself are also warning signs that we tend to look at quite a bit. So I'd say we take a bit of a more holistic look at a lot of those factors, including environmental and social factors. And where we don't see enough disclosure on environmental data, including emissions data, including supply chain data, we would be very proactive in asking for more information. And you can tell a lot about how a company sees these issues by their response to your questions. If it's a priority for them, you can tell right away. If it's not a priority, 2 months later, you can tell. So it's actually very exciting because not all the information is out there in as readily accessible a format as in a lot of other markets, but you can learn a lot about a company in the process of finding that out.
Thank you. So some of my students have told me they've been in classes with Stern professors who said, this ESG thing, it's a flash in the pan. As soon as there's another economic downturn, everybody will, stop caring about this stuff because it's all about the money. So I wonder if you could share a little bit with us about what do you see as the trends moving forward? What market, environmental, social, economic trends do you see that might cause this to continue to grow? Or if you don't see it, let me know that, but I'm guessing you do see it moving forward. And then also, what kind of challenges are creating the bumps in the road on the way? Yeah.
Sure. So we absolutely do not agree with ESG. It's just a fad. We are in it for the long haul. We've been in it for a while. So just maybe by a couple numbers, if you look at the UN SDGs and how much it is going to cost per year to reach the 2030 goals, it's $5 to $7 trillion per year to be able to meet the UN SDG goals by 2030. That is an enormous amount of capital that needs to be put to work. And it needs to be done in a variety of different ways, from equities, private equity, to fixed income, through governments moving towards their Paris Agreement plans. And so these investments are here to stay, and they're going to continue to come, and they're going to continue to create opportunities. So that's one aspect. The other aspect is ESG companies that are, and I think this has been a theme we've talked about quite a bit on the panel, is companies with better governance, companies that are more socially aware, companies that are moving towards healthier lifestyles, and changes in the apparel business, changes in the car business, electric vehicles. These are trends, and these are things that ESG metrics are going to pick up on, and these are the companies that are going to be much better positioned in the future, and that's something that we definitely agree with.
And for your own company, where do you see some of the challenges in terms of being able to move forward on this more at scale, more rapidly, et cetera? What's holding you back at times?
So I think the data and disclosure is a bit of a challenge. We have our responsible investing team that does quite a bit of work at the top of the house, just doing a lot of the proxy votings and really pushing for further disclosure from corporations. From my end, part of my job that I love is talking to issuers and seeing it, trying to work with them to come to the green bond market and pushing towards some of these green projects. That can take, sometimes it can take 3 to 6 months, in terms of engagement with the companies and talking with them, and companies not understanding why they should issue a green bond versus a regular bond. If you're not getting additional value or they're not getting any benefits, why should you come with a green bond? So there's a lot of education still that needs to be done, and so I spend a lot of my time doing that versus some of the investment pieces.
Great, thank you. How about you?
So I'll touch on 2 major trends that we're seeing. I think one is a bit softer, but I think it's the more powerful one, and that is just consumer awareness to these issues and the growing focus, I think, really across age groups of just these issues being visible. The fact that we're having a panel sitting here talking about it, I think, is a paradigm shift in the market and something that is not a trend. Certainly, large corporations are paying attention to it, disruptors are paying attention to it. Areas that are being disrupted, really from sleepy industries. We see it in the waste industry, for example, is one of the last industries, I think, to really focus on the E of ESG. We own a pre-consumer waste company that this is zero waste is becoming the new opportunity set or the sexy industry within waste. So I don't think it's a trend. I think that the consumer piece of it also transcends into talent. So what I mean by that is I think people generally are more focused on what they eat. They're more aware of the brands they consume, where they stay, where they work. And that really shifts into, I think there's a flight for talent right now across industries. And if you're not, as a firm, focused on where the best talent wants to work and what that talent cares about, you're missing out. So it's a really good sign for everyone in this room who's studying, because I think we recognize certainly at Pegasus that it's not just a differentiator. ESG focusing and having a fine lens towards ESG is not just helpful from our as putting our investor hat on, but it is helpful in having a mission alignment with who works at the firm and the companies that we invest in. That alignment is very powerful and sometimes more powerful than the bottom line. Many times we find that we're winning in deals because whether it be more conservative capital structure, a commitment to maintain integrity in a certain piece of the company, whether that be governance or social endeavors, that's ultimately winning in many cases. So those are, I don't know if I kind of mixed the two, but I think the consumer awareness piece is large and how that's impacting how companies are reacting and adapting to this increased visibility in this sector will only increase, especially as you're now seeing, I think, both, I would say, good case studies of ESG success stories, as well as when ESG has not been a key risk involved, think PG&E. Those high-profile cases are certainly being dialogued and becoming top of mind, I think, for a lot in
And what's holding you back from achieving all you'd like to achieve?
Challenges. I still think there's a lot of skepticism in the industry. I can just, as a personal anecdote, I think there used to be, and it's still there, that if you switch from kind of traditional investing to more socially conscious or purpose-led investing, it's less rigorous, it's less intense, it's less prestigious. I don't think that's true for many people in this room here, but I think there's still this notion that it's a less intense and less returns-focused sector, which I think will change over time as more, you're seeing large firms attracted to this space and hiring big talent. TPG, KKR, all the large asset managers are doing it. So I think it's kind of a chicken or, well, maybe not chicken or, it's one of those things where it takes time for folks to invest in this space and then develop it. And we're kind of maybe on the early edge of that, where folks are really interested, but they're still deploying talent and people are shifting over because it's a more rewarding space, in my opinion. But that skepticism and lack of talent.
Yeah, and thinking that it's soft. Where actually, to really understand and do ESG integration well, it's actually much more complicated and requires some really hard skills, right?
Yes.
Just a quick note, when you talked about consumers, a data point for you. We just finished a study with IRI that tracks all of the barcodes whenever you buy anything across the country. And nobody had done this. So there's all these statements out there, just like what we hear in ESG investing. Well, people don't, there's this big gap between purchasing sustainably and intent to buy, right? And what we found is actually 50% of the category growth in sustainability marketed products is in sustainability marketed products. And they are now close to 17% of all products. But 50% over the last 5 years are in that growth. So there's a lot of mythology out there that we all need to work on together. So that little mini lecture. Please tell us your thoughts on trends moving forward and also kind of what's holding you back.
Yep. I'll start with what's holding us back. And we're seeing the same things in public equities in terms of skepticism. But I think things have gotten a bit better over the last few years as more investors and more stakeholders really have come to appreciate over time and empirically the benefits of more sustainability integrated investing in public markets. And our conversations have pretty noticeably shifted from why are you excluding these industries? Why are you investing in a way that detracts from returns, which is clearly not true empirically, to a more nuanced discussion about what are the factors, what are the material factors that you really look for in certain industries? Tell us about SASB, what does it mean? Things like that. So I think that the level of our discussions has definitely improved a lot over the last few years, in large part because of, I'd say, forums like this, where we can actually talk in a lot of detail about our approaches in ways that are differentiated. And I'd say that in terms of trends, that's one trend. ESG investing itself and sustainable investing is something that we see as something of a tidal wave. And it's really something that all fundamental investors should be including in their processes. Because you can't call yourself a fundamental investor if you don't look at things that are going to happen 5-10 years down the road. So it's something that us at Goldman Sachs Asset Management are integrating into every strategy, whether it's within fundamental equity, whether it's a quantitative strategy. There are actually very good quantitative ways of looking at different ESG factors that you can systematize in a demonstrably alpha accretive way over time as well. And in fixed income, we have the same end goal of integrating ESG into fundamental investment strategies. So it's something that's not a flash in the pan. It's going to keep growing, and we're trying our best to be at the forefront of that.
Great, thank you. So for my last question, I have students ask me all the time, how do I find a career in ESG investing and sustainable finance? So what would be your recommendations to students about how to go about that? And I know you have a magic formula, of course. What are your thoughts? And let me just kick it off with you, Lee.
Well, I was kind of always an ESG investor in the first few years without knowing it as a fundamental investor. But I'd say it really depends on what you're interested in and what you want to do. I know that's kind of a trite response, but there are a lot of different roles that you can play within the ESG investing community, whether that's focused on analyzing companies, engaging with companies, choosing the right managers for strategies, and even working within companies to further their sustainability efforts and their engagement with other stakeholders. I'd say that being here is probably a good step in that process. But there are a variety of ways and variety of roles where anyone can take part.
Ailene?
I'm also going to give a vague response, but I think because it's tough to specifically, for any of the interests you may have, it's tough to narrow yourself down at the very start of any search. But I would say try to surround yourself with people who share similar values as you early on in your career, whether or not it's an investor in ESG or a sustainable finance group. If the people you're around you respect and feel like they share similar value sets than you, that's really important, because I think you can stumble your way into many roles over time, and you're kind of building a track record for yourself of what you've chosen, where you've chosen to work, and the people you've chosen to surround yourself with. And then second, I'd say try to get really good at whatever it is you choose that you're doing, because it's much easier to integrate your value set and your own autonomy into roles when you already have a position of strength. I certainly did not start my career as an ESG investor, and I still think it's an early piece of or we're at an early stage of the industry. So if you're to narrow yourself down specifically to firms that do that, I think a lot of firms have the mindset to want to focus on these issues. So be very aware and open of that. You can work at Goldman, and they care about ESG very much. Ask your, whoever you're interviewing with, and the senior leadership if it's a priority for them, because the role that you may want may not exist today. So
you get the last word.
Sure. So I'm actually very excited for all the students. I think this is a fantastic field. There's going to be so many opportunities in so many different areas. So just keep looking, keep going for it, and you may not get there in your first job, but all of the firms are opening up ESG, putting ESG integration into their analysis. If you want to be on the investment side, I'd also very much focus on the fundamentals. In order to be a good analyst, you need to know the fundamentals as well as how ESG is incorporated into those fundamentals. But there's so many opportunities. Just looking at our firm, we have our private side, which invests in sustainable cities. We have on the private side as well, investing in agriculture, impact, micro investing. So there's very great opportunities there. There's opportunities on the fixed income side. Within the fixed income market, green bonds are $500 billion out of a $15 trillion fixed income market. So we're seeing about 40% growth this year, which will only be $200 billion. So opportunities in fixed income, and then opportunities in equities. If you want to work for a specific corporation, there's all of this corporate sustainability work that's going on, and corporations are engaged. So there's a lot of opportunities.
Great. Music to everybody's ears, I'm sure. Thank you so much for great talk. So I'd like to take questions now. I wanted to ask Wolfgang, who is the former chairman of the United Nations Principles for Responsible Investment, to sort of give a few thoughts, and also feel free to ask any questions too before I open it up to everybody.
Okay. Well, thanks so much, and thanks. It was a great panel. Now, if I think back a little bit, and I want to phrase then my questions in a bigger process. Kofi Annan, the late Kofi Annan, founded the Global Compact now 17 years ago, and he founded the Principle of Responsible Investments 13 years ago. And what he said, well, the challenges of the world, of the UN, they really need to be driven by politics, but also by the corporations and the investors. And he really put along a big issue on the role of investors. The long-term investors, what role do they play on the Sustainable Development Goals, for example? So when I think back initially, and particularly in the United States, there was a lot of pushback in saying, well, we are giving up return. You're limiting our investment universe, so we shouldn't do it. So then we overcame this hurdle. So then the next hurdle was, okay, do we actually outperform? And I think this was today very clear in saying, if you look fundamentally at companies and you look really to fundamental research, in the long run, they will outperform. So therefore, there is no question that from a pure investment point of view, looking at ESG factors is actually a positive. I think now the next phase is, and that's the question to the panel, is do we as investors really make a difference? Do we really make a difference in also what is our impact? And I think we are rather frustrated with all the politics about, let's say, particularly on the environmental side. What's the role of investors? And I think they're very much ahead of the curve. But maybe you can share a few success stories of positive engagement and where you as investor, particularly if you engage with other investors and kind of have a collaborative effort, where you made an impact on environmental policies on a corporate level. So that would be my question to the audience. Maybe, depending on the last one you said, depending to now students in the room, how would they go out and tell their classmates and saying, well, I want to focus on investments, but I want to focus on ESG investments. And that's why I want to do it, because I can have an impact. I can make a change for the future. So tell us success stories, because I think that's the most important part.
Who has a success story they'd like to share?
I have, great, this is like, I love this part. This is exciting. So maybe just for our dedicated fixed income, responsible investing fixed income strategies, we actually put out an impact report on an annual basis. So last year's annual impact report showed that we avoided CO2 emissions based on what we invested in our fixed income responsible investing fund by 70 million. We provided water or clean water and waste management to 40 million people. And these are just some of the statistics that are in the within our impact report on an annual basis. So it's really exciting. We're providing their returns and we're also providing this impact to our clients. But one of my favorite examples is which we spent several months working with the World Bank and the government of the Seychelles on creating the first sovereign water bond and really looking at sustainable fisheries, really looking at their conservation efforts. Just given how much tourism and fishing is part of their overall GDP, how do you make this sustainable? And so we worked with the World Bank to make sure that the technical support was there. We worked to make sure that we got the annual metrics that we needed, and the government also got the expertise and the funding to fund this sustainable fisheries. So it was a very small issuance, but it was like probably one of the favorite bonds that I've worked on so far.
Super innovative, yeah. Anything you want to add?
Yes, I have a good success story that doesn't involve policy, but I think oftentimes you spoke to corporations making big shifts in their policies. So we own a pre-consumer waste company. It's pre-consumer waste, think the apples and bananas at supermarkets that never get taken off the shelf, and shelf life is completely made up dates, so they're perfectly fine to eat, but they end up in landfill. And it's one of the biggest travesties. I'm sure all the students in the room know the amount of food that's wasted daily that's consumable. So what the company does, it really started in 2010 with Walmart as their anchor customer. And it now diverts over 400,000 pounds, or tons, excuse me, of pre-consumer food waste annually, really through they service 17 of the 20 top supermarkets. And this happened, I think, organically with virtually no federal subsidies, state subsidies, no push from policy, but having one anchor tenant that is really actually quite progressive on zero waste and eliminating redundancies and eliminating waste throughout the supply chain. Walmart, for better or for worse, I think a lot of people have comments on Walmart, but they pushed this program and all of their competitors started to follow, and now pretty much all of the top 20 supermarkets in the US have a goal of zero waste throughout their stores, which is a meaningful difference for a small company out of Mokina that started really from nothing, that you can grab the attention with a really good program that is cost competitive. Basically what we do is we take the fruits and vegetables and divert them to animal feed. So it's a closed loop system, and it's cost competitive because it's cheaper than going to landfill. Who would have thought feeding animals is a better use of a high-value food? So that's a good example of how small innovations can have large impacts. This was a relatively small investment in considering all of the dollars that are spent in waste, and it's a sustainable company now, cash flow positive, mature, and we'll probably sell it to a waste company that hopefully can bring this into massive scale.
It's also a really good example of when you've got a huge problem, so we waste 40% of our food in this country, that in that problem, there is a whole lot of opportunity for innovation and making business. Yes.
So I'm sure everyone here has a smartphone. And you probably have a smartphone that is charged by a tiny charger about the size of a square postage stamp. And those chargers are actually incredibly efficient. If you were to make one of those 10 years ago, it would be this size. 20 years ago, it would have been this size. And they draw less power than ever before. So we've invested for a number of years in a company in Taiwan that makes those chargers. What a lot of people didn't know 10 years ago is the technology behind those chargers also works to power robots, also works to power electric cars. So what this company had been doing over the last decade, which you could not have seen in the numbers without asking the company yourself, and by really deeply delving into their strategy over the long term, is how much money they had been spending on developing these products. And a lot of investors over the last 5-10 years have been complaining about margins and complaining about the fact that they weren't making as much money as their competitors without knowing why. And today, especially over the last 1 or 2 years, we're actually starting to see the fruits of that. They've won contracts to power cars like the Chevy Volt. They've won contracts to automate factories, producing even smartphones themselves in China, in Korea, even in the US. And it's an example of kind of the benefits of a more holistic, more sustainability-oriented investment process, in that you can account for these factors that might not be as visible to the naked eye, but that are, in a lot of cases, even more important than what you can see.
Thank you. Questions? Yes, right here. So here, and then there was a hand in the back. If someone can take the mic over there while we're back there. Sophie, yes.
Hi, thank you all for joining today. That was fascinating. I had a question just about the idea of an outside firm maybe clarifying how a company's doing with their ESG work, like a B Corp or something similar. Do you see a role for outside third parties to participate in that space, or do you think a lot of this will be done in-house in the future?
Who would like to take that? I'm going to ask just for each question, just one person take the question. Who would like to take that?
Yeah, I'd say that outside parties have a very strong role to play in that investment process. Today, to be honest, there, at least in emerging markets, there aren't as many. And that's probably a growth market in the future for those of you who are interested in growth markets. But not every manager or not every company on the buy side is going to be able to have a team of 20 people focused on engagement and focused on ESG integration and analysis. So by providing products and solutions that are a bit more off the shelf and approachable for investors of different backgrounds and scales, that's a very useful role to play.
Thank you. In the back?
Hello. Bill Bowie, Reporting 3.0, and also for the context of this question, an instigator and technical advisory group member of Science-Based Targets. So ESG, Alan White, who's a co-founder of the Global Reporting Initiative, has said that ESG doesn't actually have a true sustainability gene, that it's incrementalist by nature, and that sustainability requires contextualization within thresholds. So I'm wondering what sort of beyond kind of correlating to the SDGs, what you do to tie your investments explicitly to sustainability thresholds like the Science Based Targets initiative on climate.
I think on the fixed income side, the impact investing actually ties very nicely to what you're speaking of. For us, all of the use of proceeds goes towards positive social or environmental projects. And all of these companies who are issuing these social sustainability or green bonds are required to report certain impact metrics. So CO2 reductions, number of affordable housing, clean water, all these projects are actually laid out very nicely by the corporate that is issuing the green bond or social bonds. And that aligns very nicely with the SDGs. I think the other thing that is probably up and coming, which it's going to take a lot of work and vetting from the buy side and other investors, are these things called transition bonds, and moving in that direction of does the overall company set a target for reductions, and how do you invest in it, and what does that structure look like, and are these is it ambitious enough, the targets that they're setting, and who's going to verify that this is ambitious? So I think that's kind of the next layer that we're grappling with, but it's definitely a challenge.
Thank you. Questions? So one in the front there, and then one back there. Sophie, right there. Yeah. Please.
Hi. So I'm just wondering, we kind of talked about waste earlier in terms of one of the fields that, there's a way to go in regards to, improving the ESG market there. But what are some other sectors or industries that you think have some work to do on ESG? And do you guys have examples of some of the innovations that you're seeing?
Ailene, do you want to?
Yeah, sure. I think ag is one that is often talked about. There's a ways to go on agriculture of best practices in farming. It tends to be an industry, at least in the US, is where I spend most of my time, that is tough to disrupt because it's controlled by massive conglomerates, and most of the farmers are quite fragmented. And so there's a lot of innovation happening on both coasts, or all across the country actually, at how to make farming more resource efficient. From an equity investor point of view, private equity investor point of view, there's certainly challenges in funding companies like that, as the market on the end customer side is so concentrated. It's generally the first thing you think about in investing, is who's your end customer, who are you selling to? And given the just market dynamics of ag, it's a tough industry to break through. So I think it's ripe with technology and development, R&D right now. But again, I think there are industries that there's a lot to do. Water is another really good example of a very tough industry. There's a lot of interesting technology chasing it. But we have struggled. We've been trying to invest in a water disruptor and an ag disruptor. We do have an investment in a crop genealogy, better farming, nutrients for farming that helps crop yields. But it's tough to do at scale. There are not a lot of companies kind of in the middle market that we've seen that are addressing these large issues.
Good. We had the question here. Yeah.
Thank you very much for being here. I have a question also for Ailene. So since I'm currently taking a valuation class, so my question is, how has the ESG factor changed the valuation of the private firms, especially some startups? Thank you.
Yeah. So it varies depending on the maturity of the company, certainly. I don't think there's a hard and fast rule. Certainly in more mature companies, I think you're doing the same fundamental analysis. There's no ESG premium, or, it's a lot softer. Generally when you value a company, you don't say, well, I'm going to add 2 turns because the management team is strong. It happens, there's various methodologies to value a company, but generally those soft factors of culture and great governance don't really come into play. So it kind of goes more to market dynamics on if there's a competitive auction and the management team is stellar and you see this through very strong culture throughout the firm, many companies will be interested in investing in that company. So that's on more mature companies. I think in the more VC early stage growth phase, a lot of the sectors that are attracting disruption just tend to be more heated. I think we've seen this certainly to try to find sectors that are probably less sexy on the externally. We focus a lot on green building, for example. There's still lofty valuations there, but they're not your typical software startup, and so you get away from some of the value inflation happening. But I don't think that there's a different barometer, to answer your question more directly. When you're using ESG, I think you're best to do a fundamental analysis using cash flow or whatever valuation metrics you're using, and then a company is going to be worth what someone wants to pay for it. So generally, the market dynamics will tell ultimately.
Great. Okay, I have a question here and a question in the back for the next two.
Thank you. Do any of you have
Eliza?
any figures? Thank you. Do any of you have any figures on the rate of return on impact investing versus general equity? I would think in the fixed income area, it's pretty close, unless I'm wrong.
So we've empirically, you've seen that that ESG investing over the longer term actually provides enhanced performance because you're mitigating against the downside. So you get a better return with lower tracking error. So that's one point on the ESG investing. On the impact investing, we've actually found, and this is more anecdotally, just given that we look at smaller issuance size, we've been generally like the first investor in forest bonds, water bonds, first ABS deal, that we've found more of the esoteric type investments that have actually added alpha versus some of the more benchmark issuance size where you see there's definitely a bit of a food fight for those types of bonds.
Thank you. I had a question here.
Good evening. So I feel one challenge with ESG investing are the ticket sizes. And I work in Lagos, Nigeria, and Nigeria and SEC actually recently passed green bond and green investing regulations, but many of the investable assets are not the size, say, that you all would invest in. So I want to ask, is there anything you could say that besides writing lower tickets that could be done, say, aggregating companies together or aggregating bonds together to get more companies investable in ESG?
Any? Yeah, securitization. Are any of you working on securitization? No. Kyung-Ah, do you want to answer that?
Yeah, I mean, there are actually yes. That has been applied in many conventional spaces, right? So, for example, mortgage, where by design in the U.S., you actually have a mechanism to securitize and pull in cases to deep funding of fixed income markets, right? And so you can do a similar thing for small assets. So, for example, in 2013. It happened to be in Japan, but we actually did the first sort of securitization there. And the reason why we did it there was post-Fukushima, the Japanese government came out with policies to try to diversify into renewable energy. But because the Japanese market is a very relationship bank-driven market, and we saw the opportunity to actually diversify the capital base into the institutional capital markets, and the institutional investors actually wanted to do more long-term sustainable yield, there was an opportunity to pull some of these and enable securitization, right? So we've done probably about 18 or so of those bonds since then. And it's actually a great way of not only making the sizes bigger, but also making the maturities longer, because institutional investors tend to hold this longer term than bank lending tends to be. And it's actually been applied to both emerging markets like China. And I think there was one that was done in Kenya, albeit I would say that they haven't been replicated at scale as much as one would hope, but they have been applied. Yeah.
I think the replication has been a bit of an issue. Like, we spent a lot of time trying to create the templates to have these bonds replicated, and that's been one of the big frustrating points of Why aren't more corporations coming with these types of bonds? Like, what is holding them back from this? So, and that's where the engagement becomes extremely important.
Thank you. So we're out of time. The speakers will be here for another 10 minutes or so for additional questions. I just want to sort of round up by saying, first of all, thank you so much for your time and also for the great work that you're doing to pioneer in this space. I mean, I think what we've heard from the three speakers is this is an area where they're learning, where we're all learning, where there's a lot of opportunity for innovation, where there needs to be a lot of education, not only of your own colleagues, but of your clients and the organizations that you're investing in, right? So it's complicated, but it is moving forward, and it's pretty exciting, right? So thank you so much for your time, and thanks everybody for being here. And sorry, Sophie has an announcement. Sophie, our Senior Associate Director at the Center for Sustainable Business.
Yes, so in the spirit of continuous improvement, if you've been to our events before, we love to get a quick 3-question survey out of the way. Just love to collect your thoughts and feedback. If you can, just follow the instructions on this slide here. Take out your smartphones. You go to slido.com, you enter the code CSB, and then a question will pop up, and we'll advance to a second one, and then a third one.
That's it?
That's it. So Eliza, is the first question up? It is. All right, so input your responses.
You all are such good students.
Yes.
Thank you.
All right, so we'll move to the second question now. We like collecting data here at the Stern School of Business.
Yes.
And all right, and now the third question should pop up, and that's the last thing we will ask of you. And thank you again for joining us tonight.